All of a sudden, the markets feel different. We're watching three crucial events that will occur this week. These events could really go to shape the next market trend. We're going to lay out exactly what to watch this week that could really have an impact. We're watching multiple economic reports and Fed speakers, financial markets, and economic barometers. We're trying to form a very comprehensive opinion based on many different fundamental and economic angles. But now, as it appears as though we're dealing with a new moody market tone, the following are three examples of that moodiness. All of a sudden, the 10-year bond has fallen to a 1 month low, currently paying 4.13%. This certainly is a change of pace from what we've become accustomed to closer to the 430 level. In fact, we can see the 10-year US Treasury bond has not touched these lows since mid-February. This is important as it tells us the bond market is expecting lower stock prices or at least softer economic conditions. Now we turn our attention to precious metals, specifically gold. We normally don't discuss the gold market because it's been very quiet for a long time, but this also appears to have recently changed. Gold tends to act as a hedge against inflation, a hedge against a falling US dollar, and sometimes a hedge against the threat of geopolitical and or financial stress. The $2,000 level was a formidable resistance, but all of a sudden we now see gold breaking out above 2100 and threatening all-time highs. Now we turn our attention to a more exotic market, Bitcoin. After a crypto winter which has lasted for a few years, Bitcoin today broke above its former all-time high just under 65,000. But Bitcoin made short order of that record and broke out to new highs just above 69,000. But it's important to make note the price action. When such a significant high is achieved and new records are set, we would logically expect the market to follow through. But the mighty cryptocurrency quickly fell back below our key suspected support level. We don't really spend a lot of time here talking about technical analysis because it can be quite subjective, but this price action is a cause of concern. In just a moment, we're going to talk about the three big economic events we should watch this week. Those include the Fed chairman as he heads to Capitol Hill, as well as quite a few Fed officials which are scheduled to speak, the Beige book, and the ever-important non-farm payrolls. But let's take just a moment to consider what has just happened this week so far. It really has set the tone, and there's maybe a little bit of financial irony as well. First off, factory orders. They are reported to have declined in part attributed to a massive drop in Boeing airline orders. But not only airline orders. There's also quite a bit of weakness in many other sectors of the factory orders. On a year-over-year basis, the overall manufacturers' new orders have been trending to the downside for around 2 years now. However, today's report marks an unusual drop in negative territory at a current pace of negative 2%. The transportation sector of factory orders marks quite the disappointment. On a year-over-year basis, a negative 3.9% reading today really stands out as a blemish on an otherwise steady positive trend. But there's weakness in other areas of the factory orders. It's not just a matter of a weak Boeing order. Here we can see factory orders related to consumer goods is now a negative 3.7% and has been in negative territory for several months now. What else has happened this week? Atlanta's Fed President Bostic spoke, and his message is very clear. He said, in part, the U.S. Federal Reserve is under no urgent pressure to cut interest rates given a prospering economy and job market. Before rate cuts, I need to see more progress to feel fully confident that inflation is on a sure path to averaging 2% over time. Now, it's important to note that this is not the first Fed speaker that has backed us away from the idea of a Fed cut in our near-term future. In fact, in the past month, the odds of a rate cut in May have fallen from 54 to only 20%. So what are we watching this week? Fed chairman heads to Capitol Hill, Fed speakers, Beige book, and the crucial non-farm payrolls. The Fed chairman, Jerome Powell, heads to Capitol Hill on Wednesday with markets intent on getting more clarity about how the central bank plans on proceeding with monetary policy. The Beige book will also be released. This is a significant report and represents a detailed publication about the current economic conditions across the 12 Federal Reserve districts. Then, to wrap up the week, the employment report will give us a lot more clarity as to the current strength of the economy. It's important to remember the Atlanta Fed President Bostic just said the good news is the labor market and economy are prospering. This chart shows us non-farm payroll on a year-over-year basis. It's done nothing but good decline on a year-over-year basis for 2 years now. If this jobs report disappoints, does this mean the Fed will change its stance? It's a very big question mark. Stay tuned. We're going to have a lot to talk about this week. We thank you for joining us. We look forward to seeing you back soon.